This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Hello and welcome to the Research Talks podcast here on Stockbox with Alan Green. Alan, it's good to have you back for another week. How are you doing?
Hello, Mark. I'm very well, thanks. Can't believe this week has just shot past again. It's been a crazy mad week in the markets, and certainly for us anyway. And yeah, Friday again. So looking forward to stepping off the treadmill briefly for the 2 days of the weekend.
Good. Isn't it funny, because last week we were saying how it kind of was very boring in the market and almost people had gone home, and then here we are this week. Things certainly switch around. You see the US dollar suddenly goes weak and the other currencies come on a bit stronger, and you start to see a bit of a pickup in the markets. It just goes to show, doesn't it, that it can change whenever.
Well, that's the thing. They always say it comes out of a clear blue sky, doesn't it? You know, there you are. Things are bimbling along, and the status quo seems set for weeks to come, and then a single event can just upset the apple cart, and has all those. That reverberation and the ripple effect that sort of goes through the market, affecting different sectors and commodities and currencies and all the rest of it. Yeah. That's why we're in it.
That's why we're in it. But there's definitely things going on. I've seen some news from some companies that's not slowing down. There's a lot of activity across my portfolio anyway, which is good to see. And today you're going to be telling us about a couple of companies, Mosman Oil and Gas and Spey Resources. So would you like to take Spey Resources first?
Indeed, yeah. Spey Resources. So this is another TSX listed company, and Spey have undergone an evolution recently. In fact, they delivered great returns for their shareholders over the past year. It was trading at 11 Canadian cents in July last year, and of course here we are now at 51 Canadian cents, having been as high as 60. Giving the company a market cap of 32 million Canadian dollars, but an awful lot more to come. So the company it's focused on lithium. It has interests in silver as well, which I'll come on to, but I'm going to discuss the lithium assets first of all, because there is an overlap with a company we've spoken about previously called AIS Resources, also a TSX listed company. So the company set out its stall. It has a very good website, by the way. I'll just mention to shareholders now, and there is speyresources.ca is the website address, and there's an excellent investor presentation. So after you listen to this, then it'll be a good place to go just to get put some flesh on the bones. The company has an option to acquire the 100% of the Candela 2 project located on the Incahuasi Salar, which is part of the lithium triangle in the Salta province in Argentina. And also on the Spey Resources website, there's a comparison with the Rincon asset, the Rincon lithium asset down there, which is very similar. And of course, lithium is the extraction of lithium can take place in a number of ways, either through mining lithium hard rock or lithium hard rock carbonate, or of course through the brine process. So through the last few months, Candela has undergone an evolution. On April 21st, Spey announced it had acquired all of the Tech One lithium shares issued. That's 23.5 million shares. And it has a staged payment acquisition process. It's already paid $100,000. There's a further $500,000 due by September 18th, and a further $1 million due by March 22nd. And all of this is provisional on Spey Resources spending $500,000 in exploration and production by April next year. So the overlap with Spey Resources. I'm just going to look briefly at the key people in the business. A gentleman by the name of Nada Vatanshi is the chief executive. He was appointed in March this year. And Nada has a history in finance with Edward Jones and IG Wealth, and is also the CEO of Musk Metals, and the CFO, Chief Finance Officer at Triangle Industries, and is also a director at 40 Pillars Mining. So he's very much got a background in the CFO and CEO roles. So ideal for where we are. Also recently appointed to the board is of course the gentleman running AIS Resources, none other than Phil Thomas. Phil is ex-Admiralty Resources, worked at the Nazca San Pedro mine in Peru, the Secret Pass Tin Cup gold mine in Arizona, and several other companies in South America. Has in fact some 18 years experience working in lithium projects in Argentina. So of course, Phil is basically heading up the team down there and driving forward the exploration work in these areas. So Phil was appointed to the board in May, and it was announced a couple of days ago that Spey Resources had signed an agreement to use the EcoSolve lithium solvent exchange extraction process, which is a reason a lot of the brine lithium projects have been rejected in the past is because there's too high a concentration of other elements within the brine mix. In fact, we're going to hear about another one shortly. And what EcoSolve does, it's a very accurate and efficient way of extracting lithium. Normally speaking, the yield of the lithium yield is about 97%, but also in the process, the 95% of the solvent, the EcoSolve solvent, is reclaimed. So it's a very efficient way of doing it. Now, this is something that was patented and pioneered by Melbourne University. And some of the samples taken, in fact, 25 surface samples were taken, and also 10 20-litre samples were taken and were sent back to Melbourne University for processing. And in two of those samples, the lithium concentrate was shown to be 143 parts per million, which is that's a pretty exciting find by any standards on the lithium front. To also bring the operation in Argentina into perspective, the company announced yesterday it had entered into an option agreement to buy the Besitas 1 and 2 lithium projects in close to the town of Besitas, also in Argentina. And again, the project has already had some $1.5 million spent on developing the project, and this Besitas basically is the two projects are 800 hectares and 530 hectares respectively. And AIS have undertaken sampling and trenching work at the project, and the project was really at a stalemate because there was a high concentrate of magnesium in the mix. But with EcoSolve, Spey Resources have established that using the EcoSolve solvent solution, it can efficiently remove that magnesium, and already they have a lithium reading of 125 parts per million. So that's still very good. Spey believe it will save them some $100 million in capex by using EcoSolve. So that's a pretty fantastic saving, and I'm sure a lot of other lithium explorers will be looking at this process. So that really brings us up to date. Throughout the year, the company have raised funds. There was the company raised 2.6 million back in April. In fact, it originally set up to raise $2 million at 25 cents. that raise was oversubscribed, so they ended up with $2.6 million. So the company are fully funded for these activities, and also for the silver activities, which I will come on to now. Spey Resources has two silver projects. One that's recently acquired, the Caslow Silver Project, but firstly the Silver Basin Project. Now this is in the eastern Canada. Western Canada, close to Vancouver. It's 650 kilometers east of Vancouver in the Southern Rocky Mountains and close to the historic Silver Cup mining camp. Now, this is a huge area, some 2,260 hectares, and this includes an anticline, and we're going to hear quite a bit about anticlines over the next few months. And this the 2,260 hectares includes an 8-kilometer length that covers the Southern Cup Silver Cup anticline. And there are a whole raft of reefs with amazing names and precious metal finds, which are outlined. Spey announced back in April it had engaged Tri-Point Geological Services to continue follow-ups of its 2020 work across this raft of reefs, and it's including reassessment of some of those reefs, including the Foggy Day Reef, the Bonanza Reef, the Boots Reef, and the Gallant Boy Reef. These are all mineral vein prospects, and these are going to be evaluated for nickel, cobalt, and copper content and potential. Part of the raise, of course, that I mentioned just now, is going towards that work this year. So then the company announced back in March it had issued 2 million shares to a company called Tay Resources. And Tay Resources is a company owned by two brothers, the Denny brothers, in exchange for the Caslow silver property. And this is a silver prospect which entails 13 claims and 13 crowned land grants over 3,200 hectares, some 12 kilometers west of Caslow in British Columbia. So issued 2 million shares to Tay Resources. There's a staged cash payment process of $310,000 to the Denny brothers. Historical work there has seen some 211,000 tons mined, and the returns from that have seen grades as high as 70 grams per ton of silver, 3% of lead, and 4.7% zinc. And then, as recently as 2004, Cream Minerals undertook trenching at the Cork province within the King Creek area, and recorded values as high as 137 grams per ton silver, 6.5% zinc, and 3.5% lead. So these are impressive numbers. The company estimated that the geological mapping, prospecting, and diamond drilling campaign will cost about $110,000, and of course the money is now in the pot to do that. So the shares, as I mentioned at the start, they have risen substantially. But of course, if you sign your W8BN, if you're a UK share trader, sign your W8BN, you can, of course, go straight in and buy these stocks. And I think given the prospects that are on the table, obviously, it goes without saying the potential for lithium is enormous. Lithium is being used in electric vehicles, clean technology, wind turbine technology, the battery industry. There's just a raft of applications, and it's already had a big run this year. I think lithium carbonate rose as high as $80,000 per ton from a low last year, I think, of about $25,000 a ton. So it's had a very strong run, and lithium prices. I think we're going to see a lithium supply squeeze as we sort of progress towards 2025. So any good lithium finds, such as those now being developed by Spey Resources, will be hugely in demand.
Mm. And what's the connection there with AIS then?
So the connection with AIS is of course with Philip Thomas. That's the connection initially, of course, is the the work that Phil has done, and of course the fact that AIS had an interest in Tech One lithium resources. So, working with Phil to develop this, Nada Vatanchi and his team agreed in April to acquire all of the Tech One lithium shares, and issue shares in Spey Resources for that acquisition. And they've got a staged payment process where they're acquiring the Tech One lithium shares, and AIS retains a working carry, or a carry going forward in the project. Then, of course, we had the Positas 1 and Positas 2 interests, which just fit in nicely with the Tech One project. There are two major lithium projects in the area, and AIS has already undertaken $1.5 million worth of work in developing that project. But the brine that was produced from that project contained a higher magnesium reading, and it was only that Spey Resources came along and said, I think we can solve that with the EcoSolve solvent exchange extraction process that we're using. That, of course, enabled them to strike an agreement, and with the relationship they already have with Phil Thomas now on the advisory board, it just means it's a no-brainer. And of course, the resulting funds that are coming from that mean that AIS Resources, as we've spoken beforehand, can focus on developing the gold projects in the Golden Triangle and the Lachlan Fold Belt in central Victoria.
Okay, good. No, it's good to get some perspective on that. I spoke to Phil Thomas earlier this week on an interview, and they're very active across the whole portfolio. It's something I think people should check out. They've got some good projects there, but to get some more detail there on Spey, and of course the Inca Huasi, which is the connection there with AIS, has been very useful. Okay, well, thank you, Alan.
As I say, just for a note there, go to the website, speyresources.ca website. There's an excellent investor presentation with an awful lot of pictures and data, but also a comparison with the Rincon asset, also in the same area, which shows the reading and the data that they've got back from Inca Huasi compared to Rincon, which makes for fascinating reading. So you can see the inherent value in the asset already.
Okay, great. Okay, thank you very much. So, on to Mosman Oil and Gas. I know we've spoken about Mosman before, but you're going to bring us up to date.
We have. There have been a number of exciting developments with Mosman over the past year. Just take you back. The company the company is run by John Barr, who's the executive chairman. He's formerly worked with TNG, Thor Mining, Sherwin, and Sherwin Iron, and of course Aquarius Platinum. The technical director is a fellow called Andy Carroll. He's formerly BP. He's with Australasian Energy, High Peak Royalties, Amplex, Great Artesian Oil and Gas, Petroleum Exploration in Australia. It's just a raft of companies he's worked for. And the geologist on with the team is also a non-executive, John Young, 25 years experience working for Bandux Gold and also Trek Metals. So it's a company with two key assets. Well, when I say two, I mean in East Texas, it has a raft of oil assets, which are producing oil assets from which it generates its income. And these assets include the Falcon 1 asset, which is originally produced as much as 180 barrels of oil per day. Also, the Stanley asset, which was producing at a certain level, and the Cinnabar and the Galaxy assets. Suffice to say, with Falcon, there were some issues with production early on this year where production had to stop. They were finding an awful lot of water was coming up with the oil, so production was stopped, and they decided to go in at a higher level. Production has resumed and progress from there. But the company announced yesterday, I'm going backwards and forwards here because a lot of the events are in keeping with the other assets in Australia. the company announced yesterday that it had agreed to acquire a company called Nads Oil Co. for 1.1 million. Now, Nads Oil Co. are shareholders in the Stanley asset and also two other assets. So what the acquisition has done for $1.1 million, the company has increased, Mosman has increased its stake in Stanley by 20%, up to now holds 39% working interest, and it has acquired a 20% working interest in the Livingstone well and a 23.5% interest in the Winters well, where there is also a second well that's about to be drilled. In addition, it moves the company to operator level rather than having a working interest, so it now has more day-to-day control over those two. So what that does at a stroke, it increases Stanley's production to 60. It gives bringing what Lithium and Winters currently produce, brings it up to 67, and Falcon is now producing 45 barrels of oil per day. So basically at 112 odd barrels of oil per day just on tick over, and that's not including what will come online from Galaxy and Cinnabar later in the year. So that generates the cash flow for Mosman Oil and Gas, which of course enables it to invest into other assets. Earlier in the year, it also sold another well in East Texas called the Welsh asset, raised $420,000, and the broker Spey Angel published a detailed note on the group and said it believed that it will grow its production base in East Texas some 700% in 2021, which would give it a net cash at the year end of an estimated $2.6 million, which is it's a good place to be, considering that Mosman is currently trading at 0.18 of a pence, having been as high as 0.28 of a p, and just under 0.1 pence for the year, giving it a market cap of just 6.5 million sterling, which is absolutely nothing for the potential that lies in the ground here. So that's the production side covered for Mosman. Going forward, the company also has an asset in Australia, which is it's in the Northern Territories. It's called the Amadeus Basin, and they have they have an opportunity to drill and produce helium gas. Now, there is a shortage of helium gas globally at the moment, so prices are high. Of course, helium has applications in medical, nuclear and space technologies, and current demand is way exceeding production, and it's seen prices increase over 100 times in recent months. So the Northern Territory Amadeus Basin is in an environmentally sensitive area, so Mosman has had to go through significant agreements and jump hurdles with the authorities there and also the environmental authorities, but it has permission to undertake survey work, and there's a series of announcements reflecting that over the past few months. So it's received permits to develop the asset and really get the asset to feasibility stage. So the phases mapped out to drilling and producing the helium can be established. In March, it raised 1.5 million sterling at a 0.15p placing. Those funds are solely to fund the EP145 project in the Amadeus Basin, and the work that's been done there is progressing rapidly, and indeed going back to the broker note from SP Angel, SP Angel believes that the Amadeus asset could treble the Mosman's current market cap, and unrisked as it stands at the moment, it's worth $192 million. So that's a pretty chunky piece of a piece of territory, pretty chunky asset in terms of its valuation, and clearly Mosman needs to progress the asset further, but that is very much the blue sky potential with the company. And as we see more production come on stream in East Texas, I think we're going to see further developments and acceleration of work on the Amadeus Basin too.
Okay. Good. I do like their homepage of the website. Some might say it's a bit old school, but you can clearly see, like, there's those tables where you can see what the projects they have and the interest they have. Just snapshots it very nicely.
It does, yeah, that's right. Mosman are very good at updating shareholders, and indeed, I will be speaking to the chairman John Barr in a few weeks' time, so we can get a picture of just where we are. In fact, on their the Twitter feed's also very good. There's some very good illustrations and pictures of the developments, particularly in regard to drilling, because of course that's where most of the activity is happening at present. But £6.5 million sterling. I think this is. Well, it's just the value of the licenses and probably little more. There's certainly no blue sky potential marked into the share price currently.
Okay. Well, again, thank you very much, Alan Green, for telling us there a bit about Spey Resources and Mosman Oil and Gas.
Thank you, Bart.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.